Bueno, pues buenas tardes, compañeros de la Junta. Se dirige a ustedes Javier Rivera Ríos, en capacidad de presidente de la Junta de Gobierno de la Administración de Compensaciones de accidentes de automóviles en la Adelante ACAA. Estamos hoy a 29 de noviembre, son las 2:55 de la tarde. Y estamos reunidos para celebrar la reunión ordinaria. Según estipula la ley, pues, se avisó 48 horas con anticipación, según la ley 159 del 2013. Así que pues vamos a contratar el quórum, por favor, señor secretario, si nos puede ayudar a contratar el quórum.
Sí, para la cuestión del récord, el señor Paxi Córdoba Escalera, sustitución del ingeniero Carlos Contreras, secretario del Departamento de la Persona y Obras Públicas. Para establecer el quórum, le voy a pedir a los demás compañeros que hagan la reunión que se identifiquen para la cuestión del récord.
Ingeniero Carlos Vivoli, miembro de la Junta.
Licenciado Manuel González, en representación del licenciado Cristian Sobrino, director ejecutivo de ACAA.
Señor presidente, habemos 4 miembros de la Junta, eso constituye el quórum de la misma.
Perfecto. Vamos entonces a proceder, señor secretario, a leer la lectura y aprobación de la agenda. Se hace además, para efectos de récord, perdóname, constar que está con nosotros el director ejecutivo interino de la ACAA, el licenciado Efraín García, y la señora Catherine Palanuc. Bienvenida, la primera vez que está con nosotros, como secretaria de actas de la Junta. Así que, dicho eso, pues, y constando que se ha cumplido con el requisito del quórum, vamos a comenzar con los trabajos. Así que, si por favor, podemos ir a los temas de la agenda. Vamos a discutir.
Muy bien, los asuntos a discutir en el día de hoy. Número 1, la designación de la señora Catherine Palanuc González como secretaria de actas de la Junta de Gobierno de la Administración de Compensaciones por accidentes de automóviles. Vamos a tener la presentación del informe trimestral de inspecciones por parte del Departamento de Finanzas y por parte del Departamento de Recursos Humanos, el nombramiento de juez administrador. Esa es la agenda para la tarde de hoy. Moción para que se apruebe la agenda. Aprobada.
Aprueba la segunda, Manuel Ortiz, miembro de ACAA. Tenemos el acta, la minuta de la 244 de la reunión del 21 de junio del 2018. Fue circulada, ¿todo el mundo la recibió?
Sí, yo la leí. Podemos, moción para dar por leída y aprobar el acta 244 de la reunión ordinaria del 21 de junio. Segunda. Aprobado.
¿No existe oposición? No habiendo oposición, pues también es aprobar el acta 244 de la reunión del 21 de junio, que se circuló mediante correo electrónico. Así que, pues, director, también su primera reunión, bienvenido.
Buenos días a todos ustedes, miembros de la Junta. ¿Pasamos al primer asunto?
Sí, claro.
El primer asunto es la solicitud de aceptación de la señora Catherine Palanuc González como secretaria de actas de la Junta. Esto debido a la renuncia de la pasada secretaria.
Sí, aquí en la carpeta está la carta de renuncia de la señora Carmen Rosa Soto, pero también fue circulada. La Junta debió haberla visto, pero está ya en los materiales de la reunión. Y a punto, yo por lo menos personalmente tuve la oportunidad de repasar el resumen de Catherine Palanuc. Así que, pues, si alguien tiene algún comentario, por favor. No habiendo oposición a la designación que presenta el director ejecutivo como secretaria de actas de Catherine Palanuc, pues le damos la bienvenida. Está aprobada entonces esta designación.
Moción para darle la bienvenida. Bienvenida.
La secundada, no hay oposición, perfecto. Sí, pasamos entonces al segundo tema, por favor.
Señor presidente, el segundo tema es la presentación del informe trimestral de inversiones de cambio. Para eso vamos a requerir a Catherine que por favor que pase al señor Negrón, Robert Lovefield y Humberto Mure, por favor.
Sí. Hay que estar, no sé si Robert viaja para esto, ¿verdad? Pero sí. No sé si él va a entrar en el detalle de cada página de esto, porque es mucho, sorprendido. Nada, se le dice que Romano, tú manejas tú.
Sí, y también
con Humberto.
Ok.
Yo la traje eso.
Sí, porque Digo, el que documentarlo bien está bien, pero
Y además creo que tiene un informe más.
lo deben de
para la información.
un problema. De hecho, está aquí. Pero
Uno está ahí.
and your
Taxi corto para esto.
And this is the second handout, an October update. So, when we look at it, if you want the heartburn.
This is the first time in the
Yeah.
meeting board? This is
Yes.
board? Yeah.
Yes, sir.
Si quiere, Carlos, ¿me introduciendo introducción de ok, la primera vez que puedo.
Buenas tardes a todos. Para propósito del récord, mi nombre es Carlos Nerón, director de finanzas. Estamos reunidos para la presentación del informe trimestral de la cartera de inversiones. El mismo fue preparado por nuestro consultor de inversiones, Damian. Está su representante aquí, el señor Robert Longfield, que estará dirigiéndonos a través del seguimiento de la cartera y las diferentes observaciones de la misma para el periodo de septiembre. Sin más preámbulos, los dejo con el señor Robert Longfield, que va a estar presentando la información. Robert?
Yes, thank you.
Para efectos de, for record purposes, will you present yourself?
Yes, absolutely. It's Robert Longfield, CEO of Gavion Investment Consulting Firm, and we're based in Memphis, Tennessee. All right, thank you. So you have with you two reports. You have our full quarterly report, and then you have just a brief monthly update for the month of October. Obviously, October was a difficult month, so if you don't want any heartburn, don't look at it, but we will touch on that report. And before I get into it, I wanted to speak just to a couple of the bigger issues that are going on. So when October was going on, we came in and we met with Carlos and Umberto and Efrain and talked about, do we need to go ahead and do anything because markets were going down so much in the month of October. And one of the charts that we spent some time on internally discussing as far as, all right, do we feel like this is a new 2007 coming along and another beginning of another bear market? We were going into midterm elections, and one of the charts that we looked at, and I should have brought a copy, if anybody would like it, I can email it to you, but it showed every single midterm election going back to 1946, every single one, 100% of the time, the S&P 500 was positive 6 months after the midterm election. 100% of the time.
Was what?
What? Positive.
Was positive.
Yeah, so the S&P 500 every single time, both 6 months and 12 months after the midterm election, going all the way back to 1946. We generally believe in fundamentals, meaning we want some real reason. Just because that stat's there doesn't mean it's going to happen again. It doesn't mean it will happen this time. But we're thinking in our heads, well, what causes that to happen? And some of that, if you're running a business, and whether it's here in Puerto Rico, whether it's in Tennessee, where I'm from, whatever, if you know what the political environment is, you make plans. You may do plan A if party A wins, or plan B if party B wins, but once the elections are done, you know which direction to go. And what is the market not like? They don't like the uncertainty going into the election, what was going to happen with Congress. So that's kind of the fundamental reason why we think so many times post-midterm elections, the markets are positive. And so that's where, we chatted with the team here and we said, all right, now let's just stay the course and see what happens. And you did see late October, the market started rebounding the last few days. November's been all over. Is that positive with what happened yesterday? Now, I don't know where it is today. The futures were opening up negative this morning. But it was up big yesterday, which brought the market back positive for the year. So that's one, we do think there's going to be a lot of volatility. So the markets are going to be bouncing all over, and we think that's going to continue. But what a lot of times people don't think, in 2017, markets had no volatility. It was just kind of straight up all year. Most years, you'll have a 10% pullback in every year, sometime during the year. Even though the market may be positive, you'll have a big pullback. We think we're back in that volatility environment that we're going to have. So with that, we do think, today we're not prepared to do a full asset allocation study, but at the next, one of the upcoming meetings in January, we come back and present a full asset allocation study. We'll come in and we'll do that. But we do have some recommendations that you'll see in your policies when we get into that. Because of the write-off of the trans, you're over-allocating equity. So we need to pull some equity off and get back into the range that's in your policies. We're also going to work on a policy update. So there's just a few minor things. We've read through the policies, a few minor items we want to update. So we'll come back at the next meeting as well, or the January meeting, and come back with those recommendations on policy changes as well as asset allocation study to really do that.
But within that period of volatility, are you concerned about a shift in market fundamentals?
Yes and no. So we have one really big concern.
Interest rates?
Okay. Two concerns, less on interest rates. The biggest one is China and the trade policy that's going on with China. So two things with that one. Let me see if I've got it on my notes here. With China, so the trade war in the States, the first tariff was on washing machines, washers and dryers. That was the first one that came through. So you think, all right, LG is based in Korea, and so you see the, and Samsung also, make washers, whatever. The tariff, trade tax increases, they raise their prices. Okay, that's understandable. They got a tax, they have to raise the price. So, but what did GE do? And instead of trying to sell more at a cheaper price, they raise their price too. So what happens in a trade war is the consumer is the one that pays it, because we end up paying the tax because the local business just has an excuse to improve their margins. And so that's what they usually do. So it's just a tax on the consumer. And that's why it's so, the net effect is it just slows growth. You'll have less money to spend. So it slows growth. And we think, and that's why the markets have been selling off. It slowed growth globally. So, everybody's saying, oh, well, things are growing well, but it's going to slow down because of all these tariffs that are going into effect. The one thing about, if it was just the trade, we'd be more concerned. But we're not super optimistic about the meeting that's coming up, the G20 meeting that starts tomorrow, that something will get worked out. If it does get worked out, the markets are going to go up a lot in a short time. If it doesn't, it's going to continue to be this very slow growth, very volatile environment. So our concern is volatility is picking up. Not that we're going to enter a recession, because we just think growth is kind of slow. So, but the bigger concern we have about China. So, on September 20th, the U.S. did sanctions against the Chinese military and the lieutenant general head over China's military. On September 24th, the U.S. approved the sale of $300 million of military equipment to Taiwan. That's very adversarial to China. On September 30th, that was back when we had the near collision of the Chinese warship and the U.S. aircraft carrier in South China Sea within 45 yards, which is very little when you're dealing with an aircraft carrier. And then on October 4th, it was reported on Bloomberg that the Chinese Army had inserted espionage chips on all these motherboards being sold in the US. That sounds more like a Cold War with Russia than it does just a trade war. So that concerns us and gives us concerns on why we're less certain that this G20 meeting is going to produce anything positive, because it seems it's a lot more. You now have a number 2 economy that's really challenging the U.S., and there's a lot of other issues going there. So that's the one thing that gives us concern. We love to see kind of in the near term, we think, all right, a lot of support of why the U.S. market should continue to grow with the chart I was saying about midterm elections. Volatility just seems like it's gotten more normal, but the China thing, and then now a little bit with Russia and Ukraine escalating a little bit more, those are some bigger issues that give us some concerns. And so as we work on your portfolio, it is why we want to take some risk off the table on that. And then on interest rates, to the point, and Jerome Powell made a statement just yesterday that's maybe a little bit odd with my statement, and I hope it's true, that he's saying we're closer to neutral rates, and so the market liked that, and that's why I'm raising it rallied. And you know, the expectations are the December meeting coming up that has been a raise another 25 basis points, and that'll get it to kind of that 2.25 level, 2.25, 2.5, but and then a couple more rate increases next year. But you have the Fed Chairman Jerome Powell would like to see rates at least 3%, if not 3.25, and it's really going to take some bigger issues for him not to get it there. He may move a little slower than is expected, but he wants it there because he wants rates high enough that when we have a recession, he can bring them back down. So because you have a Fed chairman that's so focused on getting rates up there, we think unless it's something really dramatic, he's going to keep pushing them up. And so that, again, gives us a little more concern that it's going to take something really dramatic for the Fed to really reverse course. So again, that's another reason why I was saying, all right, you know, it's almost sell into some strength. You know, when we see the markets up a little bit, let's work on reducing our equity exposure back down to target. So that's my general viewpoint that we'll bring in. And if you'll open up your book, I'll jump into the quarterly report. So on page 1, I note you're trading 5-year return, -1.6. That may come as a shock. And why that is because that includes the write-down of the trains. Obviously, when you write $55 million off in one fell swoop, which hadn't been done, your auditors did it, but when you write it off in one fell swoop, you know, you have a big, ugly performance. Now, I am going to show you, and I talked with staff about showing numbers excluding trains, because that gives you a sense of how well the investment portfolio is doing. So we're working on that. We have a number for the quarter, but we're going to try and give you historical data that will show it with excluding the trains, how that has performed. Policy violations, you just have 2 down there. The first one is, and 2 of the members here will be very familiar with this because it's an issue at State Insurance Fund as well. And that is one of your managers, CDBCA, who is a private equity Puerto Rico fund for growth. What they're doing. They're based in New York, but they are not registered with the SEC. Your policy requires all your managers to be a registered investment advisor, and they are not.
But this is under investment policy,
Yes, sir.
where you never make a change, right? In this portfolio, or
We haven't made a change to
you
policy.
follow just one violation.
Yes, it's just one. And I'll let other committees know what state insurance is doing, and if you'd like to follow the same suit. They have requested in writing a letter from CDBCA to have their outside counsel provide a letter on saying why they aren't required to be registered. You can maybe put that in minutes, because this isn't a fund you can get out of easily. It's a private fund that you're committed to. I will say, also give you a little bit more comfort, CDBCA invests in managers here on the island, other private equity managers on the island. All the managers they've invested in, they've attested to me, are registered with Puerto Rico government. So they are registered here locally. So they have provided that letter. Javier sent that to Jose Cala, and he's looking at that. So they have provided that letter. We can ask them to do the same for you, and that's what I would recommend. So you have that documentation on file, and then you can make an exception and go forward on that one. The other issue is high yield securities. Because of the trans write-down, you're now in violation. We'll address that with the asset allocation and the policy change, and that's just a function because the trans are gone now. You have a lower threshold on how much you can have in high yield, and you're over that. So that will be addressed within the next 90 days on that policy. Other than that, all you're in compliance with your policy. With one other exception, if you look on page 3, this is your asset allocation. So for the top green box, listed equities, you have a policy range of 10 to 30% in equities. At the end of September, after the write-down of the trans, you're now at almost 37%. So we need to get that down to at least 30% to get back in compliance with your policies. So that's the one action item that we're going to recommend today. So as I go through the report, I'll get into what we actually recommend on that. All right. Well, page 5, this will be a chart that we'll have that just shows how you compare to other pension plans. There's not a universe of just insurance companies, but it still gives you an idea of how you compare. So if you exclude the trans, you were up 2.6% for the quarter, and that's right at average. That's kind of what the average plan did for the quarter. And that was actually pretty good because you were still only 35%, 36% in stocks, where most of these plans were 50% or more in stocks. So we were pleased with that number. And then this is just a risk return chart. So we have return going up the y-axis, risk going out to x. So you'd like to be in this part of the chart. And so we'll have this over time so you can see are your managers taking undue risk for the amount of return they're getting. On page 7, I'll walk everybody through page 7. So first, the black line at the top, that's how the total fund's done with the write-down of the trans. So obviously with the write-down of the trans, you were down 30% for the quarter. But if you go down to the next 2 lines, you see total fund X trans notes. You can see you were up actually 2.6% for the quarter when you exclude that. Umberto and Carlos and I met yesterday and we talked about what we're going to do is pull the trans out across the top, and we'll show you history excluding trans. And for each of you as board members, what that will do is you'll be able to say, all right, you can look back 3 years and 5 years and say, all right, and I'm making this number up. Let's say your 3-year number was 5%. We can say, all right, our investments earned 5%. It was the trans that caused us to be down 5%. Just so you know, because I think if somebody wanted to be critical of the board, you need to know what it is excluding the trans, because that was out of your control.
Es un cambio de China a China, porque si lo hubiésemos dejado para análisis, tener ese número no nos deja comparar equitativamente el histórico de ahora en adelante a previo a lo que teníamos los trans.
El histórico de
rendimiento.
El histórico con el futuro.
Con el comportamiento esperado.
And then from that, we show total equities, which were up almost 7% for the quarter. We show each of your managers and how they compare against their benchmark. So you see Atlantic Capital up almost 9%. You know, all your managers were up. Walden up 6%, which may sound it's not as good as Atlanta Popular, but they're a value manager and they actually outperformed their benchmark, which was good. Eagle up 5%, outperforming. Your international equities performed. The one thing I will note on that is the Globista Emerging Markets, that's a manager we're watching closely. They really trail pretty consistently. I've been up to meet with them in their offices because they're in Jersey City right outside of New York, and met with them recently. By the way, we just had somebody in Boston Commons office about 2 weeks ago meeting with them. And for the board members, that's part of what we do. We want to meet with your managers periodically in our office, periodically in their office, just so we have a sense of the firm and how well the firm's doing, and we can go into more detail. So we will meet with them. Yeah, and earlier today, I just noticed that happened. So we do try and do that. So fixed income, 0.7%. That's a very good number for the quarter because the index was flat. So the fact that they made money was good, and it was really a function of your shorter duration. That, and you look at each of the managers were in line, and then Biscayne Advisors was your emerging market debt manager. So they buy emerging market countries debt. They were actually up 2%, 2.1%. And then your high yield was up 2.2, and your senior loan fund, which is floating rate high yield bond, short term, is 1.8%. So and a 4.2 for the year. So that has been great for the portfolio. Your hedge funds, Palladium was up 2.7. Globista tactical asset allocation. So in your summary sheet that I provided, which is a summary of everything I'm saying, I recommend that we terminate Globista tactical asset allocation. They've trailed consistently to what you would expect. They've lost money from, they're barely positive. If you look at it through October, they've lost money from inception, and they've been here since for almost 4 years. And we just think it's time. Our recommendation is we terminate Globista tactical asset allocation. We give $2 million to Kinetic. And if you see down 2 below is Kinetic. And you may ask, well, why Kinetic? One, we want to keep the money in alternatives, something that moves different. But look at your October report for just a moment. Look at page 4 of your October month. Because this is why we like Kinetic. Kinetic in this volatile market, Kinetic can actually perform well. Kinetic for the month of October was up 1%. And there are very small allocations in the portfolio. So we
I think I agree. It's very small.
So get them up a little larger.
Maybe you can increase this participation in Kinetic.
Yeah, about 2 million, so just a little bit. And,
A little bit.
Yeah.
And they would come from the Globista, right?
Yeah. And then the rest of the money from Globista we put into cash because we're getting more private equity capital calls. So we use that to help fund the private equity capital calls that are coming.
And maybe you can consider the increase a little bit.
Yeah. So that would be our recommendation, to do 2 into that, and then take the rest of the money, whatever is left from the liquidation, and put that into cash to fund private equity calls.
Is the decision to change to managers like Kinetic, I guess, is done after considering the potential market change fundamentals measured against the risk profile of the investments that these companies do, which conceivably could change if those market fundamentals in this highly volatile environment.
They could, and that's why we're taking a manager that's been pretty volatile. We're going with Kinetic. Kinetic, maybe if the market goes straight up, Kinetic won't make as much money. Globista will. But if the market stays super choppy or goes down, Kinetic will do much better. So they're better on the downside protection.
They're hedging.
Yes, they are. They are truly hedging. Where Globista's in the hedge fund bucket, but they're not really hedging the portfolio. So that would be the active recommendation that we would have on that portion. And then Pluscos is your hedge fund of funds, and they're doing fine stuff. An issue that we're going to have, and we'll address this in your investment policies and in the asset allocation study. But if you flip to page 9,
Over.
I'm sorry, on the quarterly report, page 9. This is your illiquid investments. So the Invesco private real estate is just about paid down. It's down to like $35,000. We've earned almost 7% annualized on that. So it's been, and considering when it started, that's a decent return. because it started right before the markdown draft. But last year, you made commitments to Grupo Guayacán, Fund 4, of $2.5 million. So we show this commitment amount right there. They've called close to half, and actually we just received another capital call from them this week, and they'll be a little over half when we make these calls. CDBCA, we've talked about Puerto Rico Fund for Growth, that one you committed $10 million to, which was a lot, especially because there's only two investors in it, yourself and Puerto Rico State Insurance. And they called $4 million, and they're calling more. And then Advent Morrow Private Equity Fund, you committed $1 million to, and they're starting to call some money now. The problem is, you can see the total is $13.5 million, but with the trans notes down, you're soon to be over allocated. You have a 5% max to private equity. You're soon to be over allocated to that. So that's something you're not right now. It's not a policy violation yet, but it will be. And so that's something we'll address when we do the investment policy to address that issue. So it won't be a policy violation, and we'll take that into consideration when we do the asset allocation to make sure that that doesn't become a problem with those. And then page 12, we just show everybody's fees. The only thing that's not on there is the private equity fund, but we have those back on their pages, their respective pages, because their fees are based on committed capital and not market value, so it doesn't calculate as easy. But you can see everyone's fees. And then on page 13, this will show the quarter, and it shows who made you money and who lost you money. We talk about returns, but sometimes it's good to see where the actual money was made. And so this shows you really clearly, all right, we wrote off $55 million in the trans. So that's just, it's gone. But you see, you know, the only other real loss was Little Vista, and emerging markets did not do well, and Little Vista lost $50,000. But you can see Atlantic Capital, Popular, Walden, Eagle, all your domestic equity guys all made you between $400,000 to $600,000 for the quarter. You can see X Squared. Oh, I didn't comment on X Squared. X Squared's having a huge year. So if you go back and look at the executive summary, they're up 35% for the trailing 1 year. When I was in San Juan a few weeks ago, I met with X Squared. And yeah, excuse me. So yeah, year to date, they're up 35%, up 32% for the 1 year. And they just made a number of bets, and they've been very right on those bets. They're very volatile. Again, another reason to increase our exposure to Kinetic, because X Squared in the month of October lost 10%. So they're up big, they're down big, but that's how they manage that portfolio. So we don't want to increase the amount of X Squared for sure, but taking a manager like Kinetic to kind of offset the risk that X Squared is giving us makes a lot of sense as we look at the portfolio. Then the next page is the fiscal year. So they're the same for this quarter, but next quarter that'll be for the 6-month period. All right, I'm just going to take one manager and walk you through this so you understand the format for the board members that haven't seen our reporting before. So we have this on each manager in the portfolio. So if you look at page 15 and 16, you'll see you don't look at this every day. So what we thought would be helpful is have just a brief description of the manager at the top. So you can read this and say, oh, what does that manager do for us? You can read it and see, okay, I remember what they're supposed to do. Then we have the top holdings. So you can see if you have any real concentration risk with the manager. So you can see at Atlantic Capital, their biggest weight is their top 4 positions are right at 5%. Top 5 positions are right at 5% of their portfolio. They don't have anything that's 10 or 15% of the portfolio. We show what their allocations are. So pick healthcare. So this is in the middle bucket. Healthcare is 19.77%. The index is 13.79. Well, what that tells you is we know healthcare was the best performing sector in the third quarter. It was up 14%. The S&P 500 healthcare section was up 14%. They were overweight. That's really good. So we expect that to show up in their performance. But we can look to see if they have any big holes or big gaps on how they're invested and see how that shows up in the portfolio performance. We also show do they have a bias towards large cap stocks or small cap stocks. That's important. Atlanta Capital is supposed to be a large cap growth manager. Well, are they large cap? Yes, they're large cap. We also, if you look right next to that, we say Russell Index membership. You can see that of the stocks that are considered by Russell to be pure value stocks, they only have 10% of those. So that's what we'd expect because they're a growth manager. And then we look at things like the PE ratio and yield and things like that up there. Then we'll show how they've done each quarter relative to their benchmark and peer group. So for Atlanta Capital, for the third quarter, they were up 8.8%. Compared to other large growth managers, they're in the top 24%. So top quartile, that's a very good number. And basically it corresponds to this graph right here. So they're just getting into the orange box. If they're in orange or yellow, you're happy. If they're blue, you're a little disappointed. If they're gray, you're not happy at all. If they're in that box. And it's just, you can see top 25%. Then if you look at their 3-year number, they were up 16.4. That's in the 76th percentile. That's just inching into the gray box. So their 3-year number is not so good. Their quarter is good, and they're from inception a little below average. But it also gives you a sense that the index since their inception is top quartile. It's been very tough to beat. And that's because Atlanta Capital doesn't just have a huge weight to Apple and Google and Netflix and the FANG stocks that have just driven the index so high. Now that helped them in October. So you don't have to flip to the page, but if you look at the October report, they were only down 4% when the market was down 8%. So it helped them outperform in the month of October, and we were very pleased with that. Popular is the next manager, and you can see not similar performance to Atlanta. They're also a growth manager. But I was disappointed with Popular Asset Management in October. They actually were down more than the market. And they're kind of the same. They do have Apple as their largest position, but they kind of underweighted Facebook. They don't have Netflix. But I still would have expected them to perform just a little bit better because they haven't kept up in the up market, but they fully experienced the down market. And then we go through Walden's been a very good manager for you, and we have all those. When we get to the international managers, Boston Common on page 23, we show their countries they're allocated to. So we'll have that if you look at page 23. You can see their largest weight is to Japan at 23%. Next is the UK, but they're underweight. They're only 12% to the UK with all the Brexit issues that have been going on. So they've been a lighter weight to that. And we'll look at that. Then later on, we have the fixed income managers. And so if you look at page 27 on Santander, you can see we show a couple things. 50% of the portfolio is in AA bonds. We show how much they have. You can see that they don't have anything below B. You look at the sector, and you can see they're 64% in corporate bonds. So we just, again, want to, give you a quick snapshot of how they're invested. And then we show kind of the yield to maturity on the portfolio along with average credit quality and duration. So you can see the yield is 3.21% to get a sense of what kind of annualized return over time you ought to expect in the shorter term of this portfolio. So we have that on each of the bond managers. I'll flip all the way to, I'll go to the hedge fund. So if you flip to page 43, on page 43, you have one of your hedge fund managers, Palladium, and they just invest in, they're kind of a liquid hedge fund or a liquid alternative strategy. So they only invest in things that they can buy and sell daily. And, you can see so a lot of iShares and ETFs of what they buy and sell. But we break it out to show you, how much is fixed, which is roughly about half the portfolio right now is in fixed income. How much is in equities, how much are non-US and other assets. And then we compare them to this liquid alternative index. And then we'll show just various statistics on each of the managers. So we do that on each manager that we have in the hedge fund space. Then if you flip to page 55, So Grupo Guadalcan, which I'm sure most of you are familiar with Grupo Guadalcan here. They're a not-for-profit trying to promote private equity and local investing here in town. So what's interesting about them is they receive the money, but they invest 95% of their money is invested in a private equity firm called ACAA Capital that's in New York. They've done a very good job in the prior funds. They're off to a good start. Usually on a private equity fund, you lose money the first year or two. You're already positive in this fund, so we're real happy with that number. And then Grupo Guadalcan takes a small little piece of up to $1 million that they invest directly locally, and all the rest of the fund, which the fund was several hundred million, I believe, was the total. All the rest of that goes to ACAA Capital. So we show again, you committed X, they called so much, they give you some distributions back, what the current value is, and then what's left they could call, and what the return has been from inception. But we also show the cash flows, because it can help you if you look at it and you want to say, all right, when did Grupo Guadalcan call money? Well, you can see they call a little bit of money just about every quarter, with the exception of fourth quarter of last year. They've made small capital calls every quarter. But it can also, if you flip the page and look at CDDCA, you can see, oh, they've had 2 capital calls on theirs, and they were just, the first one of 667,000 in fourth quarter of last year, or in fourth quarter of 16, and then in second quarter of 2017, they called 3.3 million. And then we're looking at some upcoming capital calls coming from them soon. But you can see when did the money call, or when did we start getting distributions. I just think that's helpful on these illiquid because they're so long term. And the one thing about the illiquid investments, we don't control when they call the money. They control when they call the money. We just have agreed to give it to them when they call it. Where all the rest of your managers, you control when you give them money and when you take money away from them. So that's why looking at this IRR calculation is important. And so that's the report. So we have one other action item that we're recommending. And we're recommending that we pull approximately $5 million out of your domestic equity portfolio and add to your domestic fixed income portfolio. So in addition to obviously the Globe Vista taxable asset allocation, terminating that one, adding $2 million to Kinetic, and the rest of the Globe Vista amount to cash once they're terminated. We'd like to take $5 million out of domestic equity and add $5 million to fixed income. What I'd like to discuss is how we do that. And the $5 million will get you right in compliance with your current policies. The question is, how do you want to do that? So there's 2 ways. If you look at October,
But is that when interest rates going up? The timing, is there a timing?
Yeah, no, and that is. So 2 things about interest rates, and I think we're getting, we know interest rates are going to go up a little bit more. The question is, does the curve steepen, or does just the short end go up? Because these managers are investing more here and out longer. So if it's just the short end of the curve that goes up, it won't really impact the portfolio. The other thing is, if they only do what's priced in, so there's 80% probability it's priced in the market that the Fed's going to increase in December. So that's already priced in the market. So if the Fed, it's only going to hurt the portfolio if it's more than 25 basis points, because that's already built into prices and everything in the market. The same, it's about a 60% probability that we're going to see 2, it's priced in the market, we're going to see 2 rate increases next year. If the Fed comes in and says we're going to get more aggressive, it'll hurt our bond portfolio. If the Fed says, oh, we're going to move slower, or we may not do that 3rd rate increase, that our bonds will actually rally in that environment. So we think we're starting to get close to the peak. So it's hard to say exactly, but we're more concerned about the volatility of the equity market, and that's where we get to our asset allocation. I'll come back in January. We'll maybe look for some other ideas in the fixed income market and think, all right, what are some things that are less interest rate sensitive that we can maybe use in our bond market? That are less risky than stocks, but can help diversify our bond portfolio a little bit. We'll look at that. The other area that we'll probably take a hard look at is your Invesco private real estate fund has just about paid down. We still like the private real estate market. We think the fundamentals are good as long as you're not in, urban apartments in New York and San Francisco. We think the fundamentals look pretty good still out there for real estate. So we'll probably come with some ideas on private real estate as well. So those are probably the two things that we consider. But we just feel the need to get compliant with your policies, and so that's where we think, all right, let's pull the equity down, let's put it in the fixed, because even though your fixed range in there will be over target there, but that's really fixed in trans. And so because the trans was really fixed income, if you look at those two as one, you're really not over allocated. Again, we'll correct that with the policies when we come back. And also, one other thing I'll just say about the asset allocation study. I've read through your actuarial report. The actuarial report says you want to keep a little over $60 million. That's your liability that you have there. Our viewpoint is with how short-term your liabilities are here. So this is different than like state insurance or a medical malpractice company or something like that. How short your liabilities are here. We really like to keep the bulk of that in fixing cash. Of that $61 million. So that's what you'll see that'll come through in our asset allocation study when we present it, is that we want to keep about that much in fixed, the rest in kind of equity and alternative hedge. So that'll be the general thesis that you'll see as we start working on asset allocation study that we'll come back to. But the question is, how do you want to do that? If you look at October and look at your equity managers, you have a couple options here. One would be, I'd say Atlanta and Popular, they're very similar. And if you look at October, Atlanta's done better, especially in the down market, than that. So one option would be, we just let Popular go and terminate them. Popular is a good local manager though, so I would want to be sensitive to that issue. If we don't like just letting Popular grow, the other option would be we just take money from each of the managers. So I throw out two ideas for the committee. One is just let Popular go, and that's where we take the money. The other option would be take $1 million from Atlanta, $1 million from Popular, $2 million from Walden, and $1 million from Eagle. And we're taking more from Walden because they're the biggest manager in there. So that would be the other option. And I'm comfortable with both of those thoughts. I just want to get input from the committee on what is most palatable for the committee to do. And with that, whether you'd like to just let Popular go, or if you want to take one from each of those, $2 million from Walden, and do that, and keep all the existing managers. And then we can wait and see how the asset allocation study comes and do that. So again, I'm open to ideas, suggestions. I'd love to hear from the committee on that.
I would say I made them very short.
I don't know, from my perspective, considering we are basically in the midst of revising the timelines, what would be the least, if we may call it that way, invasive approach, or more conservative approach? Until we have the new revised.
I would think we're probably just taking the smaller amount.
The smaller amount for each one, of course.
Yeah, would be the least.
And would be popular.
Yeah,
So we keep everybody.
yeah, everybody's there. We can wait and see what comes out in the asset allocation study. Yeah, and then, so with that, so the recommendation would then, if everybody likes that thought, the recommendation would be, to pull $1 million from Atlantic Capital, $1 million from Popular Asset Management, $2 million from Walden Asset Management, which is a Boston Trust, Walden, you're owned by Boston Trust, and then $1 million from Eagle Asset Management. And take a little bit.
Page 3.
Yeah, I'm on page 3 of the October. So yeah, $1 million from Atlanta, $1 million from Popular, $2 million from Walden, and $1 million from Eagle Asset Management. And then what I would recommend that we do with that.
Why you don't consider many more
You know, I'm basically looking at the size, so if we're not trying to disrupt, let's take a little bit from everybody, and then we can, because we're just too much in entities. And Atlanta, if you look, Atlanta did a super good job in October. They were only down 4.5, where everybody else was down, 9, 11.
El físico, en físico nos quedamos con el físico.
Yeah, and then we'll add that money to fixed income. So we'll take that $5 million.
Con el policy entonces. Por ejemplo, en físico no dejamos, lo movemos. ¿Qué hay ahora?
Se va a mover de allá a fixing. Hay que mover,
se va a ver todo
5 millones. Hay que mover 5 para estar incluido.
Pues en el closet, uno en Atlanta, uno en Popular,
dos de borde y uno de
ellos. ¿Y va a qué de sus 5?
Eso es lo que nos va a decir ahora.
Okay, my question is.
So,
Your suggestion in terms of physical
Fixed income, where we're going to move.
to me, what jumps out is that Ramirez is only $3.9 million. So the easiest thing would be just to add it to Ramirez. But again, if we wanted to spread it out, I don't want to go. I'd be okay if we wanted to add $1 million to Santander and $1 million to, Metro's longer term. So, we could do $1 million to Santander, $1 million to Eaton Vance, and $3 million to Ramirez if we wanted to break that up. Or just all $5 million to Ramirez. Because I want to keep it intermediate.
What's on Ramirez?
They're only $4 million.
Él está mirando solamente en términos, sorry about the Spanish. Él está solamente viendo en términos proporcionales. Era para ponerlo proporcional. Pero yo iría con 1-3-1 más conservador, porque ponérselo todos a uno solo es más agresivo. Porque el menos que tenía era para igualarlo a los otros. Si te das cuenta, están 9-9-9 y la tuya está 3-4. Al ponerle los 5 a la mía, los ponía todos en 9. Es un cálculo solamente matemático.
Pero después lo puede hacer un riesgo de hecho.
Sí, por supuesto, pero vamos a hacerlo desde ahora, porque vamos a arriesgarlo todo en un solo sitio. Es un conservador, pero él no tiene problema en que lo queremos spread. Si lo presenta de esta forma, porque es una forma de verlo más fácil.
Una forma de verlo más conservador. Ya que estamos haciendo la extracción de una forma conservadora,
Debemos hacer la distribución igual forma de conservadora. Eso es lo que yo digo.
Acá hay desproporción entre Santander y los de abajo.
Sí, el pequeño es Ramírez, los otros 3 están parejos.
Can you explain what the results of Ramirez and Newton and the result?
Yeah, and the reason I'm only considering.
quedaríamos parejos.
Eso es lo que creo.
Bueno, eso sería.
Ok, hay dos formas de hacerlo parejo. Implica lo mismo, o sea,
En 5 años.
Mira, esto es lo que pasa. Esto es lo que nos está presentando. Ok, ahora mismo lo tenemos de esta forma. 9, 3, 9, 9. Si tú quieres ponerlo parejo, por decirlo así, ponle los 5 al que tiene 3 y se va a poner 9, 8, 9, 9. Esa es una forma de verlo, La otra forma de verlo es, tú estás sacando 5, que le estás quitando un poquito a todo el mundo. Esto que está acá, te está funcionando, este esquema, este %, esta distribución, que está funcionando, pues no la afecte. Y darle un poquito entonces a cada uno y mantener menos. Yo iría por no poner todo, aunque como tú dices, eso después se puede enviar lo que sí y quitar y poner. Pero si estamos jugando a que eso puede pasar, pues hazlo desde ahora. Y mira, con darle 3 ya de sube, ya lo pones más cerca de la
Hace 3 meses.
Y de hecho, para propósito no hay que esperar que venga a animar. Y pasamos una sola, hacemos la moción completa de sacar los 5 de esta forma y distribuir los 5 de esta forma.
Habría otra moción para los acciones que yo solicité
Okay.
We're just discussing about, the last, item that we were discussing. But, before we move into the voting process, yes, one of the members is excused. Can you please, just recap on the action items that we have discussed? Because we may need to construct two different, motions. One for the issue that's at hand, and the other one for the action items.
Okay.
Go back.
So yeah, no, I'll go through that again.
So, or
Let me do a recap for you. Carlos. Ahí estaba cuando vimos cómo sacar los 5 de allá. Entonces, ¿cómo lo vamos a traer acá? Hay dos formas. Hay un desbalance matemático, no un desbalance de cuánto esté rindiendo. No, si miras lo que esté rindiendo, lo que esté trabajando, hay 3,9 y 1,4. Pues entonces, una sugerencia es poner los 5 a ese y poner todo el mundo el 9. Abajo, en el fixed income. La otra es, no se lo pongas todos los huevos en una sola canasta y darle uno en la página 3 del monthly. Los 5 los vamos a sacar de arriba y poco a poco un poquito a cada uno. Entonces, ¿cómo lo distribuimos abajo? ¿Le damos los 5 a Ramírez o le damos 1, 3 y 1 y nos ponemos todos los huevos en la misma canasta?
Lo dejamos estático, está incluido.
Es mantener la distribución que es verdad. A sabiendas de que si ves que viene sobre yo, lo que se mueve es malo trabajo. O sea, sacarlo del poco y darle 1, 3 y 1. ¿Le podemos llevar a la votación? ¿Ya?
Sí. We're going to do the voting process for the distribution that you recommend. So
we're going to do just one vote for
one
both
vote
things.
for
How we want to take out the 5 million and how we want to distribute the 5 million.
Is everybody comfortable with Ramirez, or do I need to explain a little bit more on that?
no, we will.
Okay. Okay.
I'm going to do the motion in Spanish.
In Spanish?
For record purposes.
Sí,
and also just translate it for. Bueno, para los usuarios de récord, Manuel González, a tenor de la recomendación del Asesor de Inversiones, presentó una moción para que se realicen los siguientes retiros de las siguientes cuentas. Es decir, que vamos a hacer dos mociones, un retiro y después una. O que hace la inversión.
Va a ser en uno que para hacer el siguiente movimiento económico.
El siguiente movimiento de
Inversión.
Extraer $1 millón de Atlanta Capital Management, extraer $1 millón de Popular Asset Management, extraer $2 millones de Walden Asset Management, extraer $1 millón de Eagle Asset Management. Eso totalizaría $5 millones. Esos $5 millones se colocarían entonces de la siguiente manera. Bajo el ACAA del Total Fixed Income. 1 millón para Santander Asset Management, 3 millones para Ramírez Asset Management y 1 millón para Eaton Vance Intermediate Core Bond. Presento la moción.
Secundada.
¿Posición?
Aprobada.
So I'm just going
I got the equity. So
you got the equity part. So we basically we just agreed on taking 1 million from Atlanta, 1 million from Popular, 2 million from Walden, 1 million from Eagle, and then we allocate that 1 million to Santander Asset Management, 3 million to Ramirez, and 1 million to Eagle.
Right.
Okay. So as we were discussing prior to Mr. Reboni entering, if you would mind just providing a recap for the action items.
Okay.
Because I understand we should vote on those action items.
Yeah, so just one other action, it's 2 points, but one, probably again, one motion, is to terminate Glow Vista tactical asset allocation. So if you look on page 4, terminating Glow Vista on the hedge fund, 3.4 million. Adding $2 million to Kinetic Fund, and the balance of the Glow Vista goes into cash.
En la página 4. Aquí el cash está abajo. Acá.
Sí.
Who's going to, bueno, Manuel González, además de las recomendaciones de nuestro asesor de inversiones, presentó la siguiente moción para terminar las inversiones que tenemos en Globista Tactical Asset Management, entiéndase por 3.4 millones. Y entonces, esa extracción de dinero, esa terminación, redistribuirla de la siguiente manera, sería asignarle $2 millones a Kinetic Funds Yield y el remanente se estaría colocando bajo la partida de cash para, bueno, número uno, lo que mencionaba anteriormente el asesor, que es considerando la exposición y la manera, la naturaleza que opera la autoridad, la administración, pues tenemos que tener un poquito más política la cuenta de cash para poder cumplir con las obligaciones a corto plazo, siendo una acelerada.
368.
1.368.000.
1.368. Lo pasamos dos.
Así que, presento.
Que una pregunta, para estar claro, Globista no está bajo contrato, no tiene un contrato X en este momento.
Termination clause de 30 días.
Just for the record purposes, the agreement or contract that we have with Globista allow us to terminate it without subsequent.
I haven't actually looked at the contract, but it should be a 30-day clause. Yeah.
Okay, so, pues presentó la moción pues, sujeto a que, ¿verdad? La cláusula de terminación de contrato
Segunda.
¿Hay posición?
Just to go back now. So basically, we just agreed to terminate the Globista tactical asset allocation, subject that the contract allows for termination for 30-day termination clause. And of those monies, $2 million should go to Kinetic Funds Yield, and the remaining should go to the cash.
Okay. Si no hay más para votar, pues vamos a pasar el señor Cambio.
Creo que do we have to vote on other action items or do we only? Okay, so that's it. That's it.
Okay.
Muchas gracias. Ninguna situación prevista.
No sé, ya pasó. So
Thank you
very much. We look forward to you, I believe, next year, right? January.
Yes, absolutely.
Okay. Have a safe trip home.
Thank you.
Again, I appreciate the support.
Thank you.
All right. Thank you all. And if we don't speak,
Thank you.
Thank you.
Merry Christmas and Happy New Year. Ok, vamos a simplemente a presentar el recurso humano, simplemente va a presentar el manejo de la administración.
Gracias, Carlos.
Gracias a todos.
Gracias, Carlos.
Gracias.
Vamos a presentar ahora a la directora de Recursos Humanos, Irene Ramos, directora de Recursos Humanos, para que nos presente su solicitud.
Hola, muy buenas tardes. Mi nombre es Irene Ramos, directora de Recursos Humanos de la ACAA, y queremos hacer la solicitud de designar un juez administrativo a la licenciada Tammy Medina del bufete Sin Nidelson, bufete que actualmente tiene contrato vigente con la ACAA.
Como ustedes ya saben, ya la Junta nombró un juez administrativo, la licenciada María Mauri. Sin embargo, había un caso particular donde ella participó, sin un conflicto de interés, y surge la necesidad de tener esos otros obviamente.
Está nombrada, pero no. Pues sí, ¿no? Inclusive la licencia está bajo contrato, o sea, el bufete está bajo contrato con ACAA, que básicamente va a significar todavía.
Sí, seguro.
Pues claro, esto la Junta se solicita que la Junta que la apruebe en un cambio.
Claro.
Se puede ordenar para poder estamos
Sí,
Realmente
lo que
es
quedamos en
informativo.
lo que quedamos
en la otra.
no, lo que quedamos. Una vez se hace quórum empezando la reunión,
Ya.
lo que queda sigue siendo el quórum.
Además de que no estás aprobando un contrato. Sí, simplemente nombramiento. Está bien.
Sí, por moción para que se apruebe el nombramiento.
Sugerido por el representante de recursos humanos.
Seguro.
Diputado.
Aprobado. Muchas gracias.
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 Presentamos la moción para cerrar los trabajos del día. Son las 4:01 de la tarde. Terminamos entonces básicamente la agenda programada para la reunión ordinaria. Muchas gracias.